back to Lunch at the Market. Last week we took care of most of our big positions, things like CF, John Deere, Freeport-McMoRan. All of those have been bought back. We were short put spreads, and before things looked hideous and terrible towards the end of the week, we took those things off. So that gives us a really nice week this week. We're basically being opportunistic. Spreads that we can buy back for super cheap, meaning under 10 cents. We like to sell them for over $1, a $5 wide spread for over $1, and then buy them back when they get under 10 cents. The other thing that we did today is to buy back way out of the money July puts that were short. Remember, we have long August puts, and we've been selling July puts against those every single expiration. So weeklies, monthlies, to try to recoup the cost of our August long puts and then hopefully get into August long SPY puts for free. Today, things like the 120s, the 119s, the 121s, 123s, all of those we can buy them back and take them off our book, which then leaves us free if we get something terrible, horrible, no good, very bad tomorrow, Thursday, or Friday. We can then resell puts out against them. Although this time we probably sell the 127 or the 128, maybe even 129 puts on the SPY, especially if it's Friday when the clock is really on our side. The other thing, if we can't get the premium that we want for this expiration, then we're going to look at the weeklies out for next week, and we'll look for 128, 127, or 126 puts to sell against our long puts. Days like today, we'd rather be sellers rather than buyers. The reality is, with the stock market up so much in one day, it's almost inevitable that we're going to get back some or all of these gains over the next few days. And so we did two things. One, we did another round of August SPY puts. They've gotten cheaper and cheaper as the market rises. We're going to add to that position to protect us against the debt ceiling, Italy, Greece, any other European country that they want to set on fire between now and August expiration. The other thing that you want to be doing on a day like today is taking profits. And normally we would be selling things that we're long today. But with Friday being options expiration, two things are going to happen. Put spreads that were short are going to expire worthless, and then call spreads that were long are going to expire for full profit. And so rather than take some of that stuff off today and pay the transaction cost, we'd rather just wait the 2 days and let those things come off for free. How do we make that decision between whether we paid it to take them off early or whether we wait into options expiration? We like to do a little math. Take Google, for example. We have an $80 cushion in Google, so we say with 2 days left, is it likely that Google will decline by $40 a day for the next 2 days and therefore get us in trouble? If that answer is no, like it is in Google, or CMI, if CMI, is it likely that it'll sell off $10 per day for 2 days between now and Friday? If that answer is no, that's stupid, it's really not really possible. Almost anything is possible in these days, but it's extremely unlikely that it's going to happen, then we like to ride it into options expiration. So with stocks like Freeport-Mac, Deere, and CF, we had huge positions in those names. We felt much more comfortable taking those off going into this week so that we didn't get ourselves in trouble because our cushion was a lot smaller. We had conversations yesterday with @invest_ET, @TradeFast, and @VCU Trader about when you can finally own the financials. Well, other than the simple answer, which is never, we actually do have some banks. We like big dividend payers, Banco Santander, STD, and Banco Latin America, I know, original, huh? BLX. Both of those have big, juicy dividends. BLX is 4.5%, Banco Santander, STD is 5.5%. The others that we do like are Zion, Z-I-O-N, which is a regional bank out west. They have a huge commercial real estate exposure, which commercial real estate this year has gone a whole lot better than residential real estate. Just take a look at the IYR and you'll see what I mean on commercial real estate. So we like them on a turnaround story. The last bank is Toronto Dominion. That is Canada's absolute strongest bank. You might recognize the TD from TD Ameritrade. That's right, Toronto Dominion sports an under 2% dividend. It used to be a lot larger, but the bank has gone up quite a bit. Stock at the 52-week high was about $90 a share. It's pulled back about 10% from that level and now kind of hovers around the $80 level. Those are the four banks, the only banks that we like, that we have exposures in a bullish fashion. The other bank, there's one secret bank that I won't tell you about. You're going to have to go watch the Jared Levy America's Favorite Traders. To find that, go to magnumopusfinancial.com. click on the America's Favorite Traders button right on the home page. You'll see Jared's picture. Look down, Season 2, click on his episode, and I think in the first 15-20 minutes, I give you our secret trade on the bank somewhere in the Midwest that we think you can play to profit off of the health of the U.S. farmer and rising grain prices. So to get that 5th secret bank, you're going to have to tune in to America's Favorite Traders, the Jared Levy episode. Don't forget, this week starts earnings season, and on Thursday you're going to get Yum Brands, JP Morgan Chase, and Google. We're going to be live tweeting those conference calls right from our Twitter page. You can either log on to magnumopusfinancial.com. Right there on the home page, it'll scroll by, or you can follow us on Twitter, and you're going to get live updates every time a comment comes out. We're going to cover 2 conference calls at one time. That's going to be really incredible on Thursday morning. Don't forget to follow us at MO Financial on Twitter. Like us on Facebook. We're going to be covering tons of earnings calls this earnings season, so be sure to tune in to our Twitter page. Anytime a stock that we have a position in or would like to, we're going to cover that call for you live on Twitter. Thanks for joining us on Lunch of the Market for another fantastic episode, and we will see you tomorrow.